everyone, my name is Alan Devey and I'm here with Ben Sibthorpe from CanGen Insurance. And today our panel, we're going to be discussing D&O coverage for cannabis companies, an interesting and tricky topic that we are excited to dive into a little bit. And, a little background on myself. So Alan Devey, I sit in Chicago and work for Lockton Companies, the largest privately held insurance brokerage here in the US and on the globe. So very excited to be on the panel. And Ben, we've got you joining from CanGen. And if you want to give a little background and maybe a little bit deeper rather than just what you're doing at CanGen, how did you end up here and how did you end up in the cannabis D&O world?
Thanks, Alan. Hi, everyone. Thank you for joining us today. I apologize in advance for the British accent, so hopefully everyone can follow along. Ben Sibthorpe, I'm with CanGen. I joined CanGen earlier on in 2021 in order to start the CanGen Pro division. That's CanGen's division that's focused on management and professional lines. I lead the underwriting and the product for that. My journey into cannabis was, CanGen is a great company that's been around for a long time in this space. A D&O offering is something that the market has really been crying out for, some sensible solutions to the lack of D&O coverage in this space. That led me to that. The wider D&O world, operating on the assumption that most people listening into this have a kind of a working knowledge of what's going on in the D&O space. I was on a panel back in April that described the cannabis D&O market as a hard market within a hard market. Certain reports may think that the D&O space as a wider area is slightly softening based on capacity, based on rates. Unfortunately, the D&O space for cannabis remains a very hard market. What do we define a hard market as? Certainly unknown claim scenarios, potentially catastrophic claim scenarios, and a severe lack of capacity and a lack of available limits and insurance coverage is all constituent parts of a hard market. And that's certainly where we find ourselves in the cannabis D&O space. That stretches from both public companies and private companies, both Canadian and US companies. My focus at CanGen is certainly on privately held US companies. So that's where I'll be kind of approaching this panel from. Alan, obviously, you've got some broader experience in terms of the public markets. When you're talking to a cannabis insured, a potential cannabis client, how do you broach the subject of D&O, both in terms of what they're actually getting for the product, and then talking about this kind of hard market, this hard pricing atmosphere that we have in the space right now?
Yeah, no, good question, Ben. And I think I love what you said as a hard market within a hard market. I think that describes exactly where we're at in cannabis and the D&O market in general. It's hard enough to talk to our normal clients who manufacture pencils, for example, about the insurance market and rates increasing and what's going on. But I think maybe even before we go there, Ben, when people are thinking D&O insurance, just in general to make sure we're hitting all of our audience members, what exactly does D&O insurance protect companies from and why do people purchase it? And I think from an underwriting standpoint, you'd have a great answer for that.
Sure. Well, great might be subjective depending on how I answer it. D&O is kind of almost the catch-all professional management lines policy. There's elements to it that protect and indemnify the individual directors and officers themselves, as the name would suggest. And also in terms of private company, you have the side C coverage, which is the entity coverage. So you kind of have this all-around protection for the directors and officers, their personal assets and essentially their liability and their defense in their capacity as directors, officers, executives, C-suites of the company itself, and also then the entity coverage, balance sheet coverage, any acts, errors, omissions, allegations within the terms of the policy form and the coverage that can be levied against the entity itself. We're going to dive a little bit deeper into what really distinguishes cannabis D&O and the risks that essentially those executives within a cannabis company face later on in this panel. But that's kind of the overall 10,000, 20,000 foot view for what we're seeing here. It's particularly relevant to cannabis companies, cannabis insureds, as we would refer to them. This is a very, very interesting little industry, and it's certainly not little anymore. It's growing at an exponential rate. it is simultaneously heavily regulated yet federally illegal. Obviously that's no surprise to anyone listening into this call. That creates an absolute minefield, frankly, for any directors and officers trying to steer their company with their fiduciary obligations and their duty of care and duty of loyalty to their company and their shareholders, security holders. It makes it a minefield for them, making sure they've got the best judgment in place, that they're taking their company down the right path. And if they don't, or if anyone alleges that they haven't, how are they protected? Companies outside of the cannabis space, in any other industry in the world, Alan, you've got a wide background on that. This is a regular part of the conversation for those companies. The cannabis companies, it's a little bit different. It's a little bit more of a nuanced conversation.
Yeah, and I think, Ben, you hit that well. And to kind of give a little bit more from a broker side of it and how we view these risks, I think it's important to kind of discuss a little bit the generic client profile that we're facing. And so when you think, cannabis insurance, right, and specifically directors and officers insurance, right, there's your public companies, there's your private companies, and on both sides of the house there, what we've noticed being in this market for 4+ years now, and it is changing for the positive, but when you're having complicated conversations surrounding insurance matters and why things are important, on a brokerage side, we're pretty used to having conversations with people who have bought this insurance for years and years and years, and they understand a lot of the nuances and they understand the impacts. However, the cannabis industry is moving so quickly, and it's a different set of people that are now engaged in the insurance, and the pedigree of the level of executives hasn't quite caught up to the non-cannabis industry. And so we're having a lot of these complex and complicated insurance conversations with people who may not have bought insurance before. It may not have been part of their traditional roles and responsibilities. And so it's new to them. So rather than starting on third base and being able to get the conversation home quickly, education is so much of what we're spending time on with our clients, helping them understand the products and what's available, what they're going to be able to have coverage for, explaining why it's so expensive, and what's impacting that price, and then helping them make decisions that are going to either protect their organization or are going to put their organization at risk, but we want them to be aware of those risks that they're taking on the front end so that they can be transparent to either their board or the executive leadership team that they're working within. Does that make sense, Ben?
That makes a lot of sense. So how do you, for a product like management liability, professional liability, this isn't a product that is necessary as part of the licensing process that a lot of these operators, well, all of the operators have to go through. So it doesn't quite, in my opinion, fall into the category of discretionary spend, but certainly not a kind of a necessary insurance to start up. How do you tell clients to roughly budget for, an additional piece of insurance that they didn't need for the licensing process, but certainly as a fully fledged, sophisticated business, they should certainly be looking to add to their insurance portfolio?
Yeah, so a lot of times when we get engaged, so we're not working with a lot of the startup organizations in cannabis. They're typically a little bit more mature, and they've gotten to the point where they realize that they need to spend a little bit more time on risk management and insurance. And so typically, it starts with a full program review, and a lot of the times we notice they either do not have directors and officers insurance, or they have a policy that's just riddled with exclusions that essentially isn't worth the paper it's written on. And so then that's when the education begins, and you have to be very delicate because these people have made these buying decisions. They may or may not have known what they purchased. And we're going in and, kind of saying, hey, well, maybe this isn't the best use of your capital. Because if you're buying a policy for $30,000 and it's $1 million worth of coverage, however, you've got all of these exclusions on here. So what exactly are you expecting this policy to step up and cover? And if the client can't think of a claims example that's going to be covered, and I can't think of a claims example that's going to be covered, it's probably not a good use of capital. You'd be better off just not purchasing that coverage, right? And so on the flip side of the coin, we spend a lot of time working with folks like you and the insurance markets, trying to educate them on what's actually needed. right? And so a lot of the exclusions that existed on these policies were not always optional, right? Now, a lot of them are because carriers have gotten comfortable over the last 5, 6 years writing this business, and they understand the risk. They can quantify the risk, and you can buy away a lot of the exclusions. And we'll dive deeper into what those exclusions are here in a bit. But I think having an understanding of the marketplace in general is important. And so once again, let's go back to the pencil example, right? If I was a manufacturer of pencils, there are 50 or 60 insurance companies who would happily write the directors and officers insurance for, a vanilla, either private or public company risk that, is not cannabis. And all of a sudden, once you mention cannabis, whether it's plant touching or not, the field narrows down to about a dozen insurance companies. And so 12 or so insurance companies will even have a conversation with you regarding the risk. And then when you go from, when you add that it is in fact a plant touching operation, that 12 gets cut down to 6 or 7. Then if you add that it's publicly traded, it gets cut down again to 4 companies. And then when you say it's got a market cap over $1 billion, it gets cut down to 2 companies. And that in everything is the problem with this market, that there is just surely not enough capital chasing these types of risks to create enough options and enough kind of pricing efficiency to make these products palatable. Would you agree there, Ben?
I would absolutely agree, and I certainly think tying it back into the the very definition of a hard market, there is a bottleneck of capacity that just won't come into this market yet. Now, it's not all doom and gloom. It's not all naysayers. One of the big things that insurers love is data. And certainly as this market progresses, as the years go by, as further legislation or legislative changes come through the US system, particularly as regards to safe and claim acts, you will see more carriers enter. In my opinion, I haven't spoken to anyone, this is just my opinion. You will see more carriers enter, and therefore that pricing pressure ease. But as we all know, and Alan particularly knows, this isn't just a pricing exercise. This is also a coverage exercise. And this is where that regulatory uncertainty, the insurance claims uncertainty comes into the conversation in terms of carrier appetites for how much they really want to get into this. Alan, you talked about, maybe only a couple of carriers really looking at public risks in this space. Can you talk a little bit to the primary players in the space versus the excess players in the space? Building up towers of insurance for large companies, a 1 million limit normally isn't enough. How do you kind of go about structuring a tower of insurance for a large size cannabis risk in the D&O space?
Yeah, so in building some of the bigger towers that we've built, and you hear a lot in the cannabis D&O world that you can't get enough coverage, right? And I don't believe that that's true. I think you can get as much coverage as you want. I mean, we've successfully built towers over $65 million, right? Which is a large tower. That I think that the nuance is you can't afford enough coverage. The capacity is there. And, Ben, you've got a long underwriting background, and you understand that typically the further you get away from that first dollar of risk, right, there's a significant drop in premium because the capital as an underwriter in an insurance company that you're putting up is safer and safer the further up that tower it gets. In cannabis, that's not the case. There is a little bit of a drop off, but not nearly what it should be. And so the $65 million layer on that tower is not priced as cheaply as it should be. And so the efficiencies in the market have, they don't exist, frankly. And so with the carriers who are willing to step up and write the primary towers on these, or the primary layers on these policies, we're talking on a public company minimum retentions of, $5 million, $10 million. And then getting a primary $5 million policy put in place. and then finding a secondary carrier to come in and write another 5. And not until you get in excess of $20 million are you able to get carriers to step up and put up some bigger chunks of capital. And having the ability to layer some quota sharing in there as well, it's achievable, but it's definitely not easy. And so, you know, Ben, I think it's interesting because CanGen is, without a doubt, one of the leaders in the cannabis insurance industry, right? You guys have been around a long time, have helped pioneer a lot of products and tailored and done a great job serving the industry as a whole, right? And I think everyone could agree on that. And so this year, you guys enter the D&O market, which is a huge deal, right? And you guys coming in and adding additional capacity and a product form that actually works, right? I'm not going to steal your thunder, but that's the sales pitch, right? And it works because we've read the policy form and we were blown away because you guys aren't trying to sell a watered down program that isn't going to pay claims. And so what was CanGen's thoughts of kind of coming in at this point in the game? Were you guys waiting for someone else to step up and it just didn't happen? So you guys just rolled up your sleeves and said, no, we're just going to do it ourselves?
Not quite that, but bullyish way to go in. I think, CanGen's roster of products stretches from package, property, auto, workers' comp, stock throughput. We run the whole gamut of products, and management liability is the last one to bring in. Absolutely delighted to join a company that, we have Cannabis, CanGen in the name. We are very, very committed to the cannabis CBD hemp industry. We took a very broad look at what was in the D&O market for risks in this space. And I was kind of taken aback from an underwriting background on the lack of what I would call appropriate coverage. I think at its heart, insurance should have a societal benefit, a societal good. The cannabis industry is the single largest growing industry across the US, and I would probably wager a guess across numerous other jurisdictions as well, particularly in Europe, particularly South America, particularly in Canada. Were the products on the market at that time meeting the needs of the cannabis industry? And I would argue probably not. We talked about a lot of the regulatory issues that owners, officers, directors, executives have in this space, and stepping around those. We've talked about the widely acknowledged federal status of the products in this industry and the industry as itself. You're faced with a roster of insurance products that exclude any federally illegal activity and exclude any claims for any regulatory concerns or any regulatory missteps. So CanGen's very sensible approach to it, along with our carrier partners and reinsurers, was to come in and provide appropriate coverage for a fair price. Now, fair is a very subjective opinion when you're talking about price. It remains a very expensive product. I don't think that's a surprise to any broker in the space, any client in the space. But the ability to provide meaningful coverage for, frankly, these trailblazers. A lot of these executives are trailblazers. A lot of them are, moving at 1 million miles an hour. The industry is evolving at 1 million miles an hour. Are there enough insurance products in the market to protect them? And I certainly think, I would like to think, that we are adding to that roster of available products. Also helping with capacity, also helping with some of that hard market, providing a viable solution. Now, that's not to say that there aren't options out there. There certainly are options out there. But this is where we get a little more into the right into the nuts and bolts of the exclusions of the policy term of coverage. I always describe it as value is not price. Premium is only one part of what you pay for your insurance coverage. That's not unique to the cannabis space. That's the entire insurance industry as a whole. This is a product sold on a promise. So having the right policy language in there, and also the right advisors with you. I think that's one key decision that certainly insureds and cannabis operators really should be taking into consideration.
Yeah, and I mean, Ben, you bring up a lot of good points, but one thing I want to kind of focus on here is when you're discussing all of these exclusions on the policy that are very impactful to an insurance buyer, let's kind of shift gears and focus on an underwriting perspective, right?
Sure.
As your job is to appropriately price a risk, right? And so when you're building out and this rating matrix and understanding, what you're going to charge for a certain amount of capacity that you're going to put up, what are the single biggest things you're concerned about when underwriting a risk? So when a broker's sending you a submission, what are you looking at, and what are you concerned about when looking at these deals?
Sure, I think it's certainly a multi-layered question. You have your standard exposure basis, and those numbers flow through a very nice spreadsheet, and they spit out a number to you. Unfortunately, it's not as simple as that. The cannabis industry warrants some more thought, some more tact, some more investigation. One thing we very heavily underwrite is the strength of the management team and the individual D's and O's themselves. This is certainly something I would say it's not unique to the cannabis industry, but some of the knock-on effects are unique to the cannabis industry. I think one of the things that often goes kind of not really mentioned enough is these are operators, these are companies that don't have access to traditional forms of financing and banking based on the current laws in the US. That means the financing can come of numerous ways outside of that, normally not through one source. So you're trying to keep a lot of, you're juggling a lot of balls in the air, a lot of plates, you're trying to keep a lot of different parties happy. Every time you do another raise, you add in a new set of players, a new set of investors, a new set of people to keep happy. Some of that can be through family and friends. Some of that comes through private equity and venture capital. These guys are investing because they see the upside. They see the potential. They want to get on the cannabis train, as it were. So for private companies particularly, a lot of these investors are investing in the management team itself. Therefore, we have to underwrite the management team to see what's being proposed, what's being said. I can't tell you the number of pitch decks I've seen where people are heavily advertising that they're going to be up to 100 million in revenue within 3 years for their cannabis company that doesn't yet have a license and doesn't yet have any lease or real estate space. And that's a wonderful, lofty goal. But when you're putting that out to investors as, this is our pitch and this is what we're, essentially what we're warranting and what we're representing, that becomes a slightly different underwriting conversation. As far as what else we look at when we're underwriting, we look at company size, we look at revenue, we look at asset base, we certainly look at geography and jurisdiction, we look at your capitalization table, we look where your money has come from. But one of the other big things that we do, that does come into this, we do look at the broker that people are using. We look at the sophistication of the broker. We look at a lot of the external things. What professional advisors are you using? What professional services are you using? Where are you in your company stage? All of those things come in to kind of create a melting pot of a picture of what goes into this. It is not, with the deepest respect to my underwriting colleagues on every other line of business, it's not particularly cut and dry on this space. There is no bright line delineation of, this is good, this is bad. I'm a story guy. I like hearing the story. I would love to get on the call with more and more of these insureds, with more and more of these execs, get on a call with a VP of finance, talk through some of the financial aspects, get on a call, chief exec, CFO, see what's your temperature on the company, what's going on. When you bring employment practices liability into the mix, I know this is strictly a D&O panel, but certainly EPL comes into it as well. Basic questions. Do you have a head of HR? Do you have a risk manager? Do you have a general counsel? Not every insured is going to have that, particularly startups. I realize that's a cost, but certainly when we're looking at, what we think is risk mitigation, what we think really makes a sophisticated company, those are all things that go into it.
Yeah, and I like that you're thinking about this from the management side and really making a bet, so-called, on the management team and what they're putting out there and how well tailored that message is and how realistic is that message. Because you've got kind of the luxury of sitting, in that ivory tower almost, being able to talk to hundreds of operators
I
in
think
a
that's the
short
first
time frame. So
time. I think that's the first time anyone said an underwriter sits in an ivory tower, but I'll take it. The flip side to that, I guess, Alan, I would ask you, I look at the board, I look at the management, Google is your friend in this circumstance for sure. But when you go into these clients, who are you talking to? Who are who's asking you the questions? Who's driving the decision, particularly when it comes to D&O from a client side and they're leaning on you as their insurance broker? Who's your main point of contact?
Yeah, so great question. And it differs. I don't even know if I've got one single title that is consistent across all companies. I mean, obviously, a CFO is involved. A lot of times the general counsel is involved. Sometimes we have a VP of finance or someone in the tax department who got saddled with risk. And then, a lot of times we'll have a board member handling this as like a hobby almost because they've worked in insurance at some point in their career. So they were like, we can run the insurance down and give you guys a breather. And so it's not that consistent. And so the messaging is a lot different depending on who you're speaking to, because a CFO is going to have different concerns than a general counsel. And how do you manage to that? And even to dig deeper, when we're talking D&O specifically, and let's go for a hypothetical, let's talk about a private company that if I was using a really good policy form that was very strong, right? And call it was $100,000, right? And my insurance buyer was, a great hire from the cannabis company's level, from, someone really pedigreed from another industry, and they see $100,000 policy for $1 million of insurance. And they were coming from, let's say, the automotive world. And, they're laughing because they don't understand why the pricing is so out of bounds. And to kind of go further into it, it's a really difficult position to be a broker in, because I obviously want my clients to purchase a policy that's going to be effective when a claim happens. However, we need to also protect our flank and make sure that another broker is not coming in and trying to beat us with a watered down policy that's 70% cheaper. And so I think it would be helpful, Ben, if we could talk through the mechanics of a policy. And so when you're looking at once again, let's go back to that $100,000 D&O policy that's got all of the coverages available in the market. Now, let's say I were to say, Ben, let's go ahead and these guys are really price sensitive. They've got a board member who just wants some sort of D&O insurance. It's got to be cheap. What's the fastest way to decrease that $100,000 premium?
Well, look at a competitor with a weaker policy form, and that's not picking on anyone in particular. That is, that's the standard insurance buying process. You can buy in any line of business, not just cannabis. You can buy forms that are less coverage friendly. But certainly from my view on the underwriting, we could do a couple of things. One, we could take out what we called earlier the side C coverage. We could take out the entity coverage and take away that and just provide indemnification and defense to just the directors and officers and leave the company itself out of it. Or we could add in exclusions. And we could add in exclusions that, I as an underwriter, I think are very important. But you start to take out things like regulatory coverage and regulatory investigations from an insurance policy in this space. Yeah, your premium is going to drop fairly quickly. Unfortunately, your coverage drops commensurately.
And how big of a drop are we talking about? 30 to 50%?
I would say on the high end of that is accurate. Yes.
Yeah, and so that's what we have to live with in our world as a broker, because I'm going to have to offer the client all of the options, right? We're not going to go out and sell limit. We want our clients to understand what's all available, right? And from there, we need to help educate them on what's actually going to be impactful on this coverage form. And if you see that one little line item is going to drop the cost by 50%, if I'm a buyer, red flags going up in my head saying, whoa, that's probably really important. I should have that. If it's got such an impact on the premium of a policy, then there's something there. And so it's fascinating how we have to have these types of conversations on a brokerage level with our clients to help them understand the differences. And I think even, we've been very fortunate and to work at a place like Lockton, who's fully kind of dove into cannabis, right? We've ran some tremendous benchmarking studies on D&O buying patterns, right? And to at least know that 86% of the market is purchasing D&O is a relief. And now as we continue to build on that, I'm really curious on what percentage of that 86% is purchasing a policy form that will step up and pay a claim rather than checking a box. And that's the $1 million question.
Which I don't have an answer to, but I certainly would also be curious to see that. And you've introduced the concept of, perhaps probably the single most important piece of the insurance transaction is, you've picked your policy form, you've picked your carrier, your broker's made you aware of all the risks, inherent in each policy form. They've done a pricing analysis for you. You guys have gone away and talked about it as a board. You've made your decision. You've bought your policy, and there's a claim. And now you've got to deal with an active claim. Alan, Lockton, one of the largest brokers in the world, you guys have got, claims resources. You've got brokers who are very, very well versed in the claims. You guys have seen a lot of stuff. How do you have that conversation with the client? How are you steering your clients through the claims process, particularly in this very, very niche space with some very, very distinct differences between the policy forms?
Right. And so great question, right? And something that I wouldn't say we're very beneficial to have, but the reality is we've handled well over a dozen securities class action lawsuits in the cannabis industry itself. And so we've got a lot of experience handling these claims and handling large claims, which is excellent from a resources standpoint. However, I think the single biggest problem when managing a claim, right, is in the initial discovery period, because there's no secret that cannabis companies in general run a pretty lean staff. And so the sheer amount of time and resources that it takes to get up and running when a claim hits your desk it can be very cumbersome for a client. And if they're not on that stuff from the very beginning, that's going to impact the result of the claim. And the information sharing is very key. So when we've got our, internal claims counsels who, all of our clients get access to, that they can assist and they can step in and say, okay, this is exactly what they're asking for. Let's carve out some time. Let's dial all this in and, let Lockton begin having conversations with the carrier to, help understand what's going on here and help start pushing the claims in the right direction. And so the good news is that these claims are getting paid and the carriers are stepping up and covering it, with the big asterisks of if the client purchased the right type of coverage on the front end. And, some of the other stuff that, our team talks about a lot is the off-season work, right? So if you buy a D&O policy with Lockton, right, we're not going to stop and say, okay, you're all set. We'll see you next year for the renewal. It's having those conversations saying, hey, do you know who you would hire as counsel if this happened? And let's go talk to the insurance company and see if this falls on their carrier panel. And if not, can we figure out the negotiated rates? Will your carrier or will your outside counsel work for the same rates that the carrier wants to reimburse for? Or do we need to start a relationship with one of the panel carriers so that if and when a claim ever does come about, we're prepared? We've got a playbook. And that stuff is very beneficial. And it's also more on the dreamer side of the house, because once again, if you've done any deals in the cannabis world, proactive is not the way cannabis is doing business right now. It is moving so fast that most everything is reactive. And, I think, Ben, we'd be missing a big piece here if we did not touch a little bit on just the M&A world. What cannabis is going through such a wild transformation. The M&A activity is everywhere. And that impacts directors and officers insurance more than it does any other line of coverage,
the single largest driver of claims and coverage considerations. Absolutely.
Yeah.
I think, look, I think all you need to do is open any of the trade press and you will see the number of transactions going on. You could probably open MJ Biz Daily today and see two that closed, or two are in the works, or, God forbid, one that didn't work, one that didn't come off. Yeah. If you're talking M&A in the non-cannabis space, everyone has audited financials. Everyone has, a very transparent market share or very transparent market presence. Your frequent flyers, they have sophisticated, chosen professional advisors they go with, whether that's on the banking side, the legal side, the accounting side. You have a whole village of support and a fairly well-trodden path on how to do non-cannabis M&A. Cannabis M&A, that's a completely different ballgame. And it is just the reality. I've been pleasantly pleased with the number of audited financials we have seen on our submissions, because we do ask for financials. But the reality is not every CPA firm in the world will touch a cannabis client. So not every cannabis client has audited financials. You're therefore warranting yourself as a board, as a director, as a chief exec, as a CFO, that the financials are correct. And a lot of these are projections. What happens if something is delayed, either on a regulatory side or a licensing side? 6 months later, your projections actually aren't correct. Does your counterparty still want to go through with the deal? If not, was that a misrepresentation? How are you getting your valuation in this? Again, Alan, would love to hear your side of it, but certainly from my side, any impending M&A activity is certainly one of the big triggers that we look out for, and we do underwrite that very, very closely.
Well, I think it's a really good point from a brokerage standpoint, right? And when you think about it, going into a transaction, right, sometimes they happen very quickly and sometimes they're known about for a while. But when a transaction takes place, typically the company getting acquired is going to purchase a runoff tail policy, right, to protect that legacy liability throughout the statute of limitations for 6 years. Great. However, this sneaks up on people, and they've got a policy in place that's, once again, riddled with exclusions, and not the policy that they really want to protect them for those 6 years post-transaction, when their company is in the most scrutiny it's ever been in and has a 10x multiplier on the opportunity of catching a claim. And so becoming M&A ready is a whole nother conversation we're having with our clients. Is it possible that you're going to either be an acquirer or be acquired? And if so, let's look down the line. And why is this important? Because when I come to you a month before someone's getting acquired and say, hey, there's a $1 million policy out there with a bunch of exclusions, can I go ahead and have those exclusions removed and increase the limit from 1 million to 5 million? The underwriter's going to say, no, I'm not going to go ahead and dig my own grave. Is that fair?
That's more than fair. That is more than fair.
Yeah.
And again,
this
isn't asking people to be Nostradamus or to predict the future, but if you are a cannabis company who currently doesn't buy D&O, but may have some M&A activity in the future, or your intention is to sell at some point, the earlier you buy a D&O policy in the life cycle of your company, it will help you in terms of securing your insurance. If you come to me and you have, a slightly different version of Alan's example, then if you come to me 10 days before a transaction and say, good news, Ben, I've got a client who doesn't currently buy it, but they're about to be taken over and they'd love to protect themselves. There are always situations we would offer terms. It's never a straight no, it's always a conversation, but the pricing will be significant on that to essentially inherit a lot of risk. So the earlier you have these conversations, and again, it doesn't mean you have to buy it tomorrow, but have the conversation with your broker, have the conversation with your underwriter about going forward, what's the next 5 years of an insurance policy going to look like? Not just the 12 months you're buying now, not just the annual premium you've got to pay right now. Map it out a bit.
Right. And not just place a policy for a year, but start having multi-year plans and understanding that when you get to certain revenue milestones, maybe it makes sense to flex up the limit. And you might have a little more powerful of a balance sheet, so you can also flex up the retention to make sure, you're not spending way too much money. But I think retentions are another interesting portion to discuss in the cannabis world as well, because, you're not going to have your traditional $5,000 or $10,000 private company, D&O retentions. What are you guys seeing over at CanGen? What are you guys putting out on a normal scale from a retention standpoint?
Sure, and the standard caveat with that is obviously we underwrite each risk individually. Certainly depends on where you are in the vertical, if you're an MSO, where you are geographically, any claims history. But on average, our self-insured retentions are starting at the 100,000 mark. And again, for a first-time buyer, a 6-figure self-insured retention that's an eye-opener.
That's an eye-opener, is right. And I think the market is starting to get a little bit more comfortable with that. But $100,000 is right in line for private companies, and it gets really crazy in the public world, where you're looking at $5 million, $10 million retentions, so that you can build an adequate tower. And as an insurance buyer, that's just crazy, because you got to really think, is the capital that I am putting out there the most efficient use of these dollars? Because the premiums are large, the retentions are large, and so they're out of pocket so much money before an insurance policy would even kick in. And so our job as a broker is to...
Sorry, go ahead, sorry.
No, go ahead.
I was going to say, that's not even taking into account the disparate tax treatment that these accounts are already seeing themselves. The margins, right, that can be attractive at some point, but also, these companies are running lean. So to then put a 6-figure obligation for the insurance to even attach, that's a tough pill to swallow.
Yeah, and I think, Ben, another just really good topic and almost a warning for brokers when talking to their clients regarding insurance right now is, so obviously we're in the midst of a hard market. And as a broker, a hard market means that unfortunately you have to take all of your accounts out to bid. Right? You're going to be getting quotes everywhere to make sure everyone is staying accountable and your client is well insulated from that market, which on your side means that you're going to be seeing submissions on almost every deal.
Correct.
Because every deal needs to be checked. And a lot of what we do from a brokerage side is we spend time with our clients in underwriting meetings. So that, remember when you said you want to underwrite the management team? We can do just that. We can have a call with the underwriters who are interested in the risk and the management team to learn more, ask the hard questions, and build some trust and rapport. But what we've seen over the last year in COVID is sheer underwriter fatigue. Underwriters are on these calls all day long and they are exhausted. And you can see it in their eyes. No one is engaged. No one is interested. And at the end of the call, the client comes out typically a little bit nervous and they're like, do they like us? And it's almost comical, and we have to explain this whole underwriter fatigue thing to them, but it's very real. And so any advice you can give to brokers out there on how to package a good submission, how to make sure that it's getting your attention, and what to do to position themselves to win deals?
I think it's a great question. I mean, I am not immune from the underwriter fatigue. I don't think a single underwriter in the market is. A lot of it is the quality of the information provided. Okay, you said you provided consolidated financials. Are they audited? Are they unaudited? 1 year, 2 year, 3 years? You've given me a cap table, but also there's a reference that they might have finished a Series C a couple of months ago, but you're not sure. How on top of the information, how on top of the client is the broker? That's the immediate starting point for the conversation. And certainly, underwriters are not blind to quality brokers who are very much in control of their clients and who are very in sync with their clients. This is a quote unquote specialty line, and cannabis in and of itself is a specialty class of business. There will always be follow-up underwriting questions, and those questions are not uniform. What's the speed of response we're getting to the question? How much of a priority is this for the client? How much of a priority is this for the broker? I think that's also a very fair question. I'm a huge proponent of more and more people trying to get into the cannabis industry from the insurance side. I think it's of utmost importance for the cannabis industry as a whole that the insurance market catches up to the sophistication of where cannabis is going. That being said, this remains a very core specialty that there are some very, very, very good people in. There are people who aren't that experienced in it, and that's not a criticism, that's not a slight, but it makes the underwriting task more difficult when you have a broker, for example, who is not as well versed in cannabis as they are, say, in the automotive industry. They are a bona fide expert in the automotive industry, but they're not a bona fide expert in the cannabis space. The more familiarity that people get with it, the underwriting process will become smoother, is how I would class it.
Yeah. And I think, there's not a lot of room for tourists in this industry. It's something you have to invest a lot of time and effort into understanding and learning the business and becoming part of the business so that you can truly help your clients. And I think, Ben, I just got the note that we are out of time, but this has been a great little chat, and we're very grateful for the opportunity. And if anyone has questions, please feel free to reach out to either of us, and happy to chat. But thank you very much, and that is all we have here today.
Thank you, everyone. Thank you, Alan.
Thank you.